the real significance of the ETFs is they're solving the problem of credit access, compliance, accounting, convenience, reporting, and presumably there's going to be a different one in every city in the world or every country in the world. You know, if whatever nation, if the Saudis want Bitcoin to stay in Saudi Arabia, they'll have an ETF in Riyadh. The Emiratis will think, well, maybe we'll keep one in Dubai.
So you
or
think
Abu Dhabi.
we're going to see that avalanche continue?
There's already 34.
Wow.
34 holding more than a million Bitcoin. So I think we'll keep seeing a spread. I think you'll see an ETF in every country. Like in Argentina, they don't want you to take capital out of the country.
Yep.
So the logical solution for them is an ETF where the Bitcoin is custodied in an Argentine bank.
Michael Saylor is the CEO of MicroStrategy and a massive Bitcoin bull. For Saylor, the ETFs have opened up an entire financial world of awareness and opportunity to the majority of mainstream investors. This is a moment of profound significance for the entire crypto space. Saylor explains how originally Bitcoin was perceived as a competitor to gold. But now we will see that Bitcoin is beginning to make significant gains on the S&P 500 index ETFs. In a recent interview, Saylor noted that BlackRock and other issuers of Bitcoin ETFs have started an avalanche that, over the next few years, will spread widely to other cities and countries. Essentially, they will completely revolutionize the global investment scene. Make sure to watch this next clip where Saylor outlines the ever-increasing role that the Bitcoin ETFs will play in the future. But before we continue, only a small number of my viewers are actually subscribed. If you enjoy listening to crypto-related content, please consider liking and subscribing to this channel by following the link in my bio. And get access to my free daily crypto updates and expert predictions direct to your inbox. Now back over to Michael Saylor.
ETFs are applications on the Bitcoin network. So they're securitizing Bitcoin. And they play an important role because they add value to Bitcoin and they solve the following problems. They make it more convenient to buy. If you're a 70-year-old retiree, you can pick up the phone and say, I want 10% of my assets to be in Bitcoin, buy it over the next week at the average price, click.
Yep, absolutely.
7 seconds, one phone call, done. And the person that took the phone call, they get compensated. The accounting systems work, the risk controls work, the compliance controls work. You don't have to wire any money. You might even be able to borrow the money to buy it. You can buy it without putting any cash down. You could have $1 million of Apple stock, pick up the phone and say, buy $100,000 of Bitcoin, and then your broker would loan you the $100,000 from the Apple to buy the Bitcoin. And you end up paying 5% interest to buy something that's generating a 50% yield right now. So it solves the credit problem, the convenience problem. It also solves the custody problem. You know, you don't have to worry about who the custodian is. You don't have to negotiate a crypto exchange agreement. You don't have to negotiate a custody agreement. You don't have to figure out how to move the Bitcoin. You don't have to master the Bitcoin network. You don't have to worry about all that. So it's much simpler. And then the other thing it solves is accounting and reporting, because all of your financial statements are all integrated, and people oftentimes have been doing business with the same bank for 30 years. And so everything is in one line and it's all properly calculated. And if I buy Bitcoin in 18 different days, I've got 18 different bases, and they keep track of the bases. And at the end of the year, if I have to sell something, or if I gift it to my, children, and they get the tax accounting right. So it solves all the accounting and all of the reporting issues. And those are all really critical. But the other thing it solves is the compliance issue. Compliance and capital control. When the ETFs were approved in the U.S., there was a whole set of institutional investors like pension funds and hedge funds with $50 billion, $100 billion, $200 billion. They have a lot of capital, but they could only buy through the ETF.
Right.
Even if they wanted to work for a year to set up all these other systems, they're not allowed to. Their charters prohibit them. So they've got a compliance problem. And then what happened is an ETF launched in Hong Kong. Well, you can imagine if you buy Bitcoin in that ETF in Hong Kong, that Bitcoin is not being custodied in the United States. The Hong Kong financial system prefers the assets to be custodied at a regulated bank in Hong Kong. So if I'm a Hong Kong investor or a Hong Kong institution or a Hong Kong company, I could funnel money into Bitcoin via the Hong Kong ETF. Now the rumor is that there'll be ETFs in mainland China. Well, those ETFs will come to you via a Shanghai-based financial institution, and the Bitcoin will be custodied in a Chinese mainland bank, maybe in Shanghai. There's 1.5 billion people in China that want to buy Bitcoin. The Chinese government doesn't have an objection to them getting rich. It doesn't have objection to China getting rich. They all like money.
Yep.
They all like wealth. Their objection is they don't want people to take more than $50,000 a year in capital outside of China.
Yes.
So if you buy $10 million of Bitcoin, put it in a hardware wallet, and leave the country, you violated the capital controls. But if you buy $10 million of Bitcoin via an ETF in Shanghai, and the Bitcoin is then purchased by the exchange and custodied in China, the Chinese banking system benefits, the Chinese currency benefits, the Chinese culture benefits, the Chinese government gets their taxes, the Chinese investors get Bitcoin. And so the real significance of the ETFs is they're solving the problem of credit access, compliance, accounting, convenience, reporting, and presumably there's going to be a different one in every city in the world or every country in the world. You know, if whatever nation, if the Saudis want Bitcoin to stay in Saudi Arabia, they'll have an ETF in Riyadh. The Emiratis will think, well, maybe we'll keep one in Dubai
So you
or Abu
think we're
Dhabi.
going to see that avalanche continue?
There's already 34.
Wow.
34 holding more than a million Bitcoin. So I think we'll keep seeing a spread. I think you'll see an ETF in every country. Like in Argentina, they don't want you to take capital out of the country.
Yep.
So the logical solution for them is an ETF where the Bitcoin is custodied in an Argentine bank. But as that happens, you see what's going on is when the Chinese buy billions of dollars of Bitcoin, they'll drive up the price of Bitcoin in New York.
That's the network effect.
And in Argentina.
That's right.
Well, so they're just one more application. ETFs are an application, companies on the Bitcoin standard are an application like MicroStrategy, and Cash App and Strike and other mobile apps, they're an application. And the crypto exchanges like Coinbase and Binance, they're an application. And eventually people will build it into their mutual funds, build it into their pension funds, build it into their insurance plans. More applications. Each application wants Bitcoin. Each application slurps the Bitcoin because they want capital, because we call it capitalism, because these are the capital markets. Every company needs capital. We build a civilization on capital. How much? $400 trillion of capital? There's $900 trillion of wealth in the world. At least half of it has to be pure economic energy or monetary premium. The world wants capital. Everybody needs it. Every government, every school, every institution, every charity, every religion, every family, every company, they all need capital, right? So Bitcoin will just spread as an asset to capitalize on. It is kind of the ultimate monetary union. It's a cooperative bank in cyberspace. Everybody that joins makes the network more powerful, drives up the value of their assets, and the more people that join, the more power they all have. Just like you have a union, if every worker in the country joins the union's pretty powerful.
Yeah.
If nobody joins the union, there's no point in being in a union. It's like, here's the big idea. What if we created a union, but we put our money in it instead of our labor? It's not a labor union. It's a monetary union.
Thanks for watching. Don't forget to join Cloud AI Crypto.